I'm Dennis Brager. I'm a former IRS trial attorney and a California State Bar certified tax specialist. This is just one in a series of videos designed to give answers to questions that my clients frequently ask. Today we are going to talk about what are the top signs a criminal tax investigation could be forthcoming. While many people think that a criminal tax prosecution is something that cannot happen to them unless they deliberately set out to defraud the IRS, the truth is that criminal tax charges can be triggered by even a seemingly minor misstep. Mistakes on your taxes that are perceived by the IRS as willful misstatements or accountant or tax preparer malpractice are but a couple of the common ways that well-meaning taxpayers find themselves facing serious criminal penalties, including a federal prison sentence. In short, the things an average person does not know about tax law or tax crimes can hurt them when faced with an IRS audit or criminal investigation. A tax lawyer can help a taxpayer by providing context for any actions or inactions that might be misinterpreted by the IRS agent and negotiate a more favorable outcome. Clients sometimes ask, how does the IRS determine that I committed tax fraud? The IRS's Internal Revenue Manual provides guidance for IRS agents in investigative techniques to be used in identifying tax fraud. One of the methods utilized by agents is to look for indicators or so-called badges of fraud. The IRS has developed a list of these badges of fraud regarding a taxpayer's income, expenses and deductions, financial books and records kept, income allocations, the taxpayer's conduct, and the method of concealment utilized. By category, these badges include income, entire sources of income being omitted, unexplained increases in net worth, expenditures substantially exceeding income, no explanation for the source of certain bank deposits, concealing accounts or assets, excessive dealings in cash, cashing checks considered as income at check cashing services. On the expense side, claiming dependency status for independent, deceased, or non-existent individuals, claiming false deductions, and claiming business deductions that are actually personal expenses are all considered badges of fraud. With respect to books and records, keeping multiple sets of books, irregular numbering of invoices, making false entries in the records, failing to keep records at all, providing false receipts, and engaging in non-standard accounting practices can all lead to criminal tax problems. The taxpayer's conduct can also be considered a badge of fraud. So for example, rude or abusive behavior towards the agent, making false statements, incomplete disclosures, failure to follow the advice of the accountant, backdated documents, submission of a false W-4, and other similar acts are all considered badges of fraud. Then there's the concealing of assets, placing assets in the names of others, transferring property in anticipation of tax bills, secret transactions, transactions outside the typical course of business, and reservation of rights or interests in purportedly transferred property are all considered to be badges of fraud. The foregoing is not a comprehensive list of all items considered to be badges of fraud by the IRS, but it does indicate the type of issues that they are looking for. In the next video, I will discuss which actions by IRS agents may reveal a forthcoming criminal investigation. If you found this video helpful, please let me know by leaving a comment. And if you would like me to update you when I post a new video or send out a newsletter, please send an email to taxhelp@bragertaxlaw.com. That's taxhelp@bragertaxlaw.com, all one word. Thank you for watching my video and have a great day.